The interesting thing is, obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had.
Get ready to uncover the secrets of one of the world's most successful business magnates and philanthropists, Warren Buffett. In this video, we'll dive into the 5 basic rules of investing according to the man himself. But be aware of the simplicity of these rules, because they hold the power to transform your financial future. Do you want to avoid complex investment strategies that never seem to work? Then you will want to take advantage of this. Join us as we explore the straightforward principles that have made Buffett a legend in investing. From making intelligent decisions to staying patient. These rules are the key to building wealth and achieving financial freedom. So whether you're a seasoned investor or just getting started, this video is for you. Get ready to learn from the best and take your investment game to the next level. Don't wait any longer. Hit that play button and let's get started. Time.
It's the only thing you can't buy. I mean, I can buy anything I want, basically, but I can't buy time.
And so to have time is the most precious thing you can have.
I better be careful with it. Yeah. There's no way I will be able to buy more time.
The stock market can be a daunting place for those who are new to the game. With numbers and trends fluctuating dizzily, feeling overwhelmed and uncertain is easy. But fear not, for there is one steadfast truth about the stock market that can ease your worries: the long-term annual growth rate. It's simple. Over time, the stock market grows at about 7% per year, taking inflation into account. Of course, that doesn't mean you'll see a 7% return on your investments every year. In some years, you might experience losses of 20% or more. But as long as you stay invested and weather the ups and downs, the good years will eventually outpace the bad. Think of it as a roller coaster ride. You might feel a bit queasy during the dips and drops, but if you stay buckled in, you'll eventually reach the end of the ride and emerge with a sense of exhilaration and accomplishment. And the longer you stay invested, the more likely you will see positive returns. Over 10 years, you'll likely see gains. But if you can hold on for 20 or 30 years, you're almost guaranteed to make money. Historically, the stock market has retained value for over 20 years. That means that if you're willing to be patient and ride out the rough patches, you're virtually assured of coming out ahead. So don't let the ups and downs of the stock market scare you away. Keep your eyes on the long-term growth rate and stay invested for the long haul. You'll be well on your way to financial success with patience and perseverance. Stay calm. The stock market can be a wild ride with sudden dips and dramatic swings that can leave even the most seasoned investors uneasy. But in the face of market turmoil, keeping a level head and resisting the urge to panic is essential. Many investors were understandably nervous when the coronavirus pandemic first hit in March 2020. The stock market took a sharp dive, with the S&P 500 falling 34% in just over a month. But those who remain calm and resist the temptation to sell saw their account values rebound before September. On the other hand, those who panicked and liquidated their investments during the decline likely regretted their decision later on. They accepted the temporary drop in share values as a permanent loss and missed out on the subsequent recovery. It's important to remember that the stock market is a long-term game, and short-term fluctuations are to be expected. By staying focused on your investment strategy and resisting the urge to react impulsively to short-term events, you'll be better positioned to weather the storm and come out ahead. Diversify your portfolio. Diversification is a crucial strategy for managing risk and maximizing returns in your investment portfolio. By spreading your investments across multiple stocks, sectors, and asset classes, you can minimize the risk of all your positions crashing. Some of your investments may go up while others go down, but the overall mix of gains and losses will net out to smoother performance over time. And by avoiding the most extreme setbacks, you'll be positioning yourself for better performance in the long run. Consider the example of a portfolio heavily invested in a single industry, such as technology. If that industry experiences a downturn, the entire portfolio risks suffering significant losses. But by diversifying across multiple sectors, you can spread out your risk and minimize the impact of any one sector's downturn. diversification can also help you capture opportunities in different asset classes. For example, if stocks perform poorly, bonds or real estate investments may offer a more attractive return. By diversifying across multiple asset classes, you're better positioned to capture these opportunities and maximize your returns over time. Hold. Buy and hold investing is a strategy favored by many successful investors, including the legendary Warren Buffett. At its core, buy and hold investing involves choosing high-quality stocks or funds and holding onto them long-term to generate gains from long-term price appreciation. One of the key benefits of this strategy is that it minimizes transactions, as Buffett has noted. By holding onto your investments for the long term, you can avoid the transaction costs and taxes associated with frequent buying and selling. But more importantly, buy and hold investing prevents you from trying to time the market. Holding onto your investments even during market downturns makes you more likely to capture the market's long-term growth potential. Of course, this doesn't mean you should blindly hold onto your investments. As a buy and hold investor, keeping an eye on the long-term outlook for the companies or funds in your portfolio is essential. If a company's long-term prospects have fundamentally deteriorated, it may be time to sell. Overall, buy and hold investing is a strategy that can help you build long-term wealth while minimizing the costs and risks associated with frequent trading. So if you're looking to develop a robust investment portfolio, consider adopting a buy and hold approach and focusing on high-quality investments that you can hold onto for the long term.
We've held Coke stock since 1988. We've held Gillette stock since 1989. Held American Express stock since 1991. We had actually previously been an American Express in the 60s in Disney. So there are companies we're familiar with. We generally sell. We would sell if we needed money for something else, but that has not been the problem in the last 10 or 15 years. 40 years ago, my sales were all because I found something that I liked even better. I hated to sell what I sold, but I also didn't want to borrow money. So I would reluctantly sell something that I thought was terribly cheap to buy something that was even cheaper.
Don't watch the prices. Picture this. You're standing in a stormy ocean, trying to stay afloat amidst the tumultuous waves. The wind is howling, the rain is pouring, and the lightning is striking around you. It's a scary and chaotic situation, but imagine if you had a life raft that you could cling to for safety. When investing in challenging markets, Warren Buffett has a life raft of advice for you. Don't watch the market too closely. In other words, avoid getting swept up in the storm of market volatility. Instead, hold onto your hold forever stocks and trust that they'll weather the storm.
Up as to what percent of the days since I was born they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting 3 times as much in dividends as the whole average was selling for at the start. And you had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
Sure, it can be tempting to obsessively track every twist and turn of the market, checking your portfolio every minute of the day. But what good does that do? If you're confident in your investments, then there's no need to panic over every dip in share prices. It's like staring at the stormy ocean. It won't make the waves less tumultuous. Warren Buffett's investment approach may not promise quick riches, but it has proven a reliable way to build wealth over time. By staying invested for the long haul, diversifying your portfolio, and keeping fees low, you can maximize your returns and achieve your financial goals. It's important to remember that investing is a marathon and not a sprint. By giving your investments time to grow and weather market fluctuations, you can minimize the impact of short-term volatility and capture long-term gains. This requires patience, discipline, and a commitment to your investment strategy. At the same time, staying calm in the face of market turmoil is essential. Panic selling or making short-sighted investment decisions can result in significant losses that are difficult to recover from. By staying focused on your long-term goals and maintaining a diversified portfolio, Of course, it's also important to be mindful of fees and expenses. By selecting low-cost investment options and minimizing transaction costs, you can keep more of your returns and compound your wealth more quickly. Warren Buffett's investment approach is a proven formula for building long-term wealth. By following his example and staying committed to your investment strategy, you can achieve financial independence and create a secure future for yourself and your loved ones. Now, we'd love to hear from you. What's your favorite investment strategy? Are there any tips or tricks you'd like to share with other investors? Let us know in the comments below. And as always, if you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to our channel for more informative content. If you'd like to learn about investing and personal finance, check out some of our other videos. Thanks for watching, and we'll see you in the next video.